Most traders chase the wrong breakouts, and that's why they keep getting trapped. But before every explosive move, the market leaves a clue hidden in plain sight. They're called narrow range days, NR4s and NR7s. These are volatility ranges that pack energy, and when they pop hard. This indicator marks these exact ranges on your chart and only fires a signal when price really clears with context. In the next few minutes, we'll show you how to add it, how to read it, and how to trade it like a pro. Let's dive in. NR4 and NR7, first introduced by Toby Crabel, are some of the cleanest volatility patterns you'll ever use. Here's how they work. NR4 means today's range is the tightest of the last 4 bars. NR7, the tightest of 7. Think of them like pressure cookers. The tighter the lid, the bigger the release. And that's where most traders mess up. They treat every breakout the same. But when price rips through a narrow range high or low, it's not just a breakout, it's an escape from compression. That carries way more information. This indicator does the heavy lifting for you. It flags those NR4 and NR7 bars on a higher time frame, then automatically projects the high, the low, and the midpoint onto your active chart. Instantly, you've got structure, bias, and timing all in one view, so you can stop chasing every move and focus only on the breakouts that matter. When you load the indicator onto your chart, the first thing you'll notice is a shaded box. That box highlights the NR4 or NR7 bar from your selected higher time frame. Its top and bottom edges are drawn at the bar's high and low, while a dashed line through the middle marks the exact midpoint. As new candles form on your working time frame, those 3 levels extend forward, transforming what was once a single compression bar into a live, tradable map. NR4 setups are colored in green, while NR7 setups are colored in yellow. The breakout logic is simple but powerful. Price must first cross the midpoint, which acts like an intent check, showing whether the market leans bullish or bearish. Only after that bias is set do breakouts matter. When price pushes through the high after holding above the midpoint, an up arrow appears. When it drops through the low after trading beneath the midpoint, a down arrow prints. This 2-step sequence helps filter out false pokes and keeps your attention locked on true expansions, not noise. Inside the settings, you'll find a handful of options that shape how the tool behaves in real-world trading. The time frame setting decides which higher time frame provides the NR bar, daily by default, but you can anchor it to weekly or a number of other time frames depending on your style. Pattern type lets you choose whether to track NR4, NR7, or both, with NR7 being rarer but often more explosive. You can toggle breakout signals on or off if you prefer to trade the levels manually, and adjust signal size to keep arrows visible on any screen. The color settings let you match the up, down, and range visuals to your chart theme so the map stands out without overwhelming your price action. In practice, the flow becomes second nature. You wait for a fresh NR box to appear from the higher time frame. Then you trade the break of the boundary, using the arrow as confirmation or placing stops and targets directly off the box edges. The cleanest trades come when the breakout aligns with broader market structure and momentum, and they become especially powerful when the trigger is an NR7. That's when the pressure cooker lid flies off and the market makes its biggest moves. As mentioned earlier, these setups are most powerful when they line up with market structure, and especially when they're NR7 signals. So let's walk through an example. Normally, you'd have to mark major structure changes on your chart by hand, but nobody wants to spend time doing that. Instead, we'll use the LuxAlgo Price Action Concepts tool to automatically detect structure shifts. In the settings, we'll disable internal structure and switch swing structure to all. Swing structure focuses on the larger, more meaningful shifts in price, which is what we care about here. Next, we'll adjust our NR indicator so it only tracks NR7 patterns, since those are the ones with the most compression and the highest potential. Now here's the setup we're looking for. First, we want confirmation that the overall trend is bullish, which we'll see through break of structure labels printing on the chart. Once that break is in place, the market should retrace, ideally about 50% of the initial swing move, or into the golden pocket of a Fibonacci retracement. At that point, if an NR7 box appears, that's our cue. When the breakout signal confirms, we take the entry, place a stop just beyond the opposite side of the NR7 range, and set our target at the prior swing high. The key here is confluence and timing. By combining structure detection with the NR7 breakout tool, the guesswork is gone. Instead of randomly chasing moves, you're stacking signals, filtering for quality, and stepping into trades with precision. And that's the NR4 and NR7 with breakouts indicator, the simplest way to turn volatility compression into clean, rules-based trades. You get a higher time frame squeeze mapped onto your active chart, a midpoint to define bias, and precise breakout signals to time entries with confidence. You can add this tool right now for free inside the LuxAlgo library. If you want to supercharge it, combine it with the premium Price Action Concepts algo for confirmations. Get access for 30 days risk-free at LuxAlgo.com. Trade the expansion, manage the risk, and let the levels do the heavy lifting. See you on the next chart.